Celsius stock continues to fall. Shares are down 33% in the past month as of the close of trading on Tuesday. So what in the world is going on with this stock? Is the company in trouble? There's been some data that's come out that has shown the company's growth is slowing. Maybe market share growth is slipping a little bit. But the thing we need to keep in mind is that this is short-term data, and we need to keep the long-term picture in mind. So I think the way that I'm interpreting this in general is that shares got really, really expensive earlier in 2024. There was a really big run up early in the year. That's pulled back over the past month or so. If you're a long-term shareholder, I don't think there's anything that's fundamentally changed, but this may be one of those situations where you might want to wait until second quarter earnings to come out to get what the full picture actually looks like. So I want to get to exactly what we know from a data perspective and then why I'm still bullish on Celsius long-term. The biggest thing is international growth, which the company hasn't really tapped yet, but I'll get to that in just a second. My name's Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content, and thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's start with some information about the stock movement first. Here you can see the stock price recently down 33%. Today, this is Tuesday, it was down another 6.5%, but pull back on what's actually going on with the stock, down 5% for the year after a huge run up to almost $100 per share. But over the past year, up 14%. So nice growth in the stock. 5 years, up 3,674%. Now, that's not going to be sustainable long term, but it does seem like some of these changes are just kind of hiccups in the long-term growth story. So let's get to some data that has come out. And this is data from Nielsen presented by Morgan Stanley Research. And what you can see here on the top is Celsius's sales growth year over year is the blue column. And these are weekly readings. So 50% growth early in the second quarter. That falls to 20% growth year over year later in the second quarter. Remember, Celsius was growing at a 100% rate in 2023. So it's not all that surprising that the growth rate is starting to come down. What would be worrying for investors is if that growth rate is going to be 15 or 20% in 2024 instead of over 30%. The 2-year average is the dot that you see on this chart. So that 2-year average is still hovering close to 100%. On the bottom, what you see is Celsius's market share. And this is where investors are worried that Celsius is losing market share at a really critical time of the year. Warmer weather, this is typically when there's more energy drinks sold. So the reading is that the share of sales peaked at 10.7% in early May, and then that fell to 9.6% by mid-June. Now, I think it would be a little bit strange to see that much of a massive shift in Celsius sales just over a few weeks, but this is what this survey data is showing you. But the other thing to keep in mind is the gold dots show dollar share year over year change in basis points. So there is a 100 to 200, so 1% to 2% increase in market share for Celsius. So if you take a long-term view, what you're seeing there is that, yes, maybe the market share is 9.6% in mid-June, but that means it was more like 8% a year ago in June. So the company is gaining market share over time. Are those market share gains going to be up and to the right in a straight line? Absolutely not. And you're not going to expect Celsius to get 100% market share either. The other thing is that these readings aren't going to be 100% accurate. But this is the information that investors are selling the stock off on. So if we get information from second quarter results that don't actually line up with this, then the stock could rise. If these results are reinforced and management said, hey, things are slowing down a little bit, inventory is coming down for distributors, which we know is happening at Pepsi, in part because we're losing a little bit of market share, that's when shares are going to slide even more from where they are today. So this is what the market is seeing, is maybe this data, is these readings on a week-to-week basis are maybe heading in the wrong direction, and investors don't quite know what to expect for the second quarter. So that uncertainty is not what investors want to see. That's why shares are selling off. A huge sell-off on what I think is not the best data to be making investment decisions on, but we'll see how this plays out when results come out. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. This is the chart that I think is going to be most critical to watch for Celsius over the next couple of years. You can see in gray, this is the growth in North America. So this is going to include primarily the US, although Celsius expanded into Canada, and it seems like that's going really well. The company's gaining market share. I think it's a mid-single digits market share, but this is what happens is that those market share gains go up really rapidly. That increases inventory in the system. That increases sales for Celsius, increases awareness. So maybe the growth slows a little bit in the US, but maybe it picks up in Canada. You can see, though, that Europe is essentially nothing for Celsius. So that's almost pure upside. Asia, exactly the same. In other geographies, essentially nothing in revenue. So the international expansion opportunity is absolutely tremendous. The company has announced a few countries that it's going to be entering this year with distribution partners, also leaning on Pepsi for some distribution partnerships around the world. So there's a ton of opportunity for Celsius to grow in other markets. If you think about this business and where it's priced right now, the enterprise value is about $13.9 billion as I'm recording. That means the enterprise value to sales multiple is 9.2. If Celsius can grow revenue to $3 billion over the next 3 years, which I think is pretty reasonable given the trends, that enterprise value to sales multiple falls under 4. The price to earnings multiple, which is currently 61, falls to closer to 20 or 25. So this is where growth can really make up for a lot of negative trends. And so I have a hard time seeing the sell-off for Celsius being a massive piece of news unless we see that in the second quarter, growth is slowing really, really significantly. We did see slowing growth in the first quarter, but that was blamed in large part on reducing inventory for their distributors in the US, particularly going through Pepsi, and they helped quantify that. They gave some numbers with what their year-over-year growth levels were. Seemed like investors were pleased by what they heard from that first quarter story. Does that story change in the second quarter? That's the thing to keep an eye on. But don't forget that the US is not the only market that we need to focus on for Celsius. There's Canada. They're growing in Europe. They're trying to grow in parts of Asia. So there's a lot going on for Celsius, and this is such a capital light business so that it could potentially grow significantly over time without having to invest a lot in the business. I think based on where we are with the stock price, as I'm recording, about $56 per share, if we see the stock continue to fall, this is becoming a really nice buying opportunity for what should be a long-term growth story. So the market may have gotten ahead of itself earlier this year with Celsius, now coming back closer to value territory. If the stock falls under $50, that's where I get really excited about buying shares. But what do you think about Celsius today? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.